Our next company is Advanced Energy, created by an experienced team of oil and gas specialists in February 2020. The first acquisition for Advance is a 50% farm-in for the B10 well on the Buffalo Field on Timor-Leste, an island close to Indonesia and off the coast, northwest coast of Australia. Advanced raised £22 million for the buy-in in April. This was a previously producing field and has the potential to produce, I shall say this very slowly, 40,000 barrels of oil per day, of which Advance get 20,000. Leslie Peterkin, the CEO, joins us from Geneva to update us on the latest news from Buffalo. Good evening, Leslie.
Yeah, hi, Donald. Okay, well, look, welcome everybody. I understand there's quite a nice audience here today, Donald, so that's very good of you to have arranged all of this. Yeah, I'm the CEO of Advanced Energy. We started 18 plus months ago, so we're still pretty young, pretty ambitious. We've got an intention to grow the company quickly through the style of our particular strategy. And I don't know how much detail I really need to go into, but let's just try and run through this deck. And actually, personally, I'm rather more interested in hearing questions and answers, which usually helps me understand what people really want to know. So can you move to the next slide? Donald? Hello? Okay.
You need to move yours as well.
You're driving. Sorry, I beg your pardon.
No problem.
Okay, so so here we are on our vision, which is the first slide, and I think I've more or less covered it. We're a very experienced team, and I'll talk a bit about that more. We've got a strategy which we think is quite an innovative and how shall we say, novel in terms of the way we want to go. We want to particularly be involved in assets where we can unlock value that others may not have seen, or assets that have been overlooked, what we call the unloved assets, and we want to be non-operated. So we want to be a small team which is G&A effective, managing a portfolio of assets that are non-operated with operators that we believe we can engage with constructively to move these assets to maximize their value. And we're particularly interested in having two-party joint ventures where it's simply ourselves and the operator, so that we can influence through our experience the optimization of the value of the assets. We have a sort of notional aspiration to do more than 20,000 barrels a day by mid-decade. Personally, I don't think that's necessarily that ambitious, but clearly we're not there yet, so I won't say any more about that right now. In terms of corporate overview, I've touched on experience. This number at the top here, 120 years, is probably not correct. It's probably more than greater than 150. We're 6 people in the company, all on the board, and I think on average we probably have about 30 years experience. So we have a lot of experience to bring to this endeavor, and it's one of the things I like to talk about quite a bit. Our business is a risk business. And it's only through experience that you get used to and have the ability to manage risk. And we believe that given the experience we've got and the breadth of experience internationally, covering many disciplines, that we're well placed to deliver on our aspirations. And we believe in ourselves. We have 5% of the company at the current time, and it's quite likely that we'll put more money in at a later stage as required. We're certainly very willing to do that. I mentioned about the novel strategy for growth. We're targeting only discovered resources. We don't do exploration. And this is something we came up with before we even started the company. And it's not specifically related to an ESG requirement. It's something that we wanted to do from the outset. We don't want to explore. It's where money gets burned and lost. We want to be in discovered resources where we can add value and take them forward to either where they are now developed and beyond, or get them developed where they've been languishing and undeveloped. And I mentioned about how credible partners. Obviously, we don't want to get into a two-party joint venture with people we're not comfortable with. That goes without saying. Our first asset is one we identified before we started the company, or desire to get into. It was the Buffalo asset which is located now in East Timor. We can talk about that a little bit later. The operator is Carnarvon. Of course, I just mentioned I was in Australia. I was 10 years in Perth, and there I got to know a lot of the assets in this region, and I've worked a number of important assets in this particular area. So I know the reservoir well, I know the circumstances well, and I'm very comfortable with Carnarvon as an operator. We think they're highly capable, and working together as a team of two, because we're two parties now, both 50%. And the Buffalo asset itself has a 2C resource that's been certified at 34 million barrels, and that's what we're aiming to move to reserves, with the B10 appraisal well that's due to be start drilling this month. And as you mentioned, Donald, previously this field was produced and developed and produced by BHP and Nexen, and when it came on production, 2 wells produced a total of 45,000 barrels a day each. A very prolific reservoir with a very high recovery factor capable, which is known in the region. And we are also in the business of growing the company. And when we started the company, we brought with us a number of assets that we were chasing. We've since then grown that portfolio of potential assets, and we are actively engaged in running forward some of these assets to hopefully another concluded deal, I mean. Here is the Buffalo FPSO of before. This is what we will be putting in place in due course, we hope, once we've drilled this well and proved up the reserves. You can see the very flat camera sea state out here. And this is in the Timor Sea, and this is very typical of what it's like there. We are not in the cyclone zone. You hear about cyclones in Australia. We're not in that zone. The history of the field, I mentioned it's BHP and Nexen were involved in its development about 20 years ago. It produced 21 million barrels over 5 years from primarily 2 wells, and those 2 wells originally produced 45,000 barrels a day initially. They both produced 8 million barrels each, as it happens, so they were very prolific and very valuable. Production shut in 2004 after the 5 years at 4,000 barrels a day. That was related to facility issues that weren't foreseen at the time that they developed the field. And of course, we won't necessarily have the same problems. We can learn from the past. And in terms of the location, you see a map on the right-hand side. The very small one shows the East Timor, the Timor Sea, Darwin on the right, the block on the in the middle there, and the map underneath that shows the new maritime boundary, the blue line, that was agreed in 2018 between the two countries. It was a long-standing issue that needed to be resolved. It has been resolved now. Previously, the area was managed both by Australia and East Timor. Relations between the two are very good. And right now, as it happens, you can see that the Buffalo Field, the pinkish area with all the reticular blocks, that was previously the Australian boundary, and that the Buffalo Field has moved to the right-hand side of the blue line, so it's in East Timor now. We're very happy with the idea that it's in East Timor. The East Timorese are very, very keen to get their assets on production. You can see the Bayundan field just on the bottom right there. It's about 100 kilometers from Buffalo. I was actually involved in developing that field. It's a very large gas condensate field, and it's still producing at this time. In terms of lower operating costs, instead of operating costs, in Southeast Asia obviously expect to be able to have lower operating costs, so that's all very helpful. The PSC terms are very good, the best in Southeast Asia actually, but they've actually been enhanced by the fact that the field moved into East Timor, because the East Timorese, according to the Maritime Boundary Agreement, the East Timorese have to keep any asset that moves into East Timor fiscally whole. So in other words, it's essentially the Australian system, but it's been converted into the PSC, and the PSC was enhanced accordingly. So in fact, in East Timor, the Buffalo Field has the best PSC in East Timor itself. How have we got to the point where we're looking at this asset 20 years on? At the time that it was developed, it was understood that there was an undrilled crest, or attic as we call it, the highest point in the field, if you will. And 3D reprocessing of today, 20 years on, has been able to delineate that much more clearly. And we have 2C remaining oil in place as a result, certified at 85 million barrels. In terms of the farm in itself, I won't dwell too much on this. I think you touched on it, Donald. The deal was that we would join in the asset at 50% with Carnarvon, that we would pay for the appraisal well that needs to be drilled up to a certain cap, which was $20 million, and then we would seek to secure the funding for the development 100%. And the net result of all of that is, if you look here, in the third blue bullet point, we the first year of free cash flow at $50 is very close to $300 million. And that's based on the CPR economics of risk. That's nothing to do with what we calculated ourselves. And 70% of the gross cumulative cash flow is recovered in the first 2 years. Essentially, what we have here is a very high rate producing reservoir with a modest volume of oil, and you combine the two and you get a huge amount of cash flow in a very short time. Coming to something that's probably quite interesting for people to try and understand a little bit better what's going on. If we look at the map here, this is a notional, it's not the exact situation, because obviously we're going to drill this appraisal well, Buffalo 10, where the black dot is. But this is one realization of the remaining oil column, and the green area, shaded area, is where we see the undrilled attic or crest that I mentioned earlier, and the Buffalo 10 well is being drilled essentially smack in the middle of that. And that is, in effect, the location. You can see to the left and a little bit up to the top, there are little black lines going out to well numbers, and which are the downhole numbers, downhole locations of the previous development wells. The point being that those wells didn't penetrate the attic, and the attic is therefore there to be delineated with this well, and then we're produced with probably 3 development wells. The objective is effectively to find an 80-meter column. Interesting to note that the 2 best wells I mentioned earlier that produced 8 million barrels, they actually only penetrated a 55-meter column. So in other words, even if you don't know too much about the oil business, you can anticipate that we're going to get more per well in an 80-meter column than we would in a 55-meter oil column. We're in very shallow water, so it makes it easy for us to drill wells. It's relatively straightforward. We're not in deep water. And that also helps with the development, which can be very simplified. The well design is copy-paste of many other wells that have been drilled in this area. So there's nothing really to be concerned about that. It's a 30-odd day well down to about 3,500 meters. So it's fairly deep, but again, it's normal here. There's nothing unusual. The key issue is we have high impact for low risk. That is really the message here. The mid-case recoverable, I've mentioned several times, 4 million barrels. It's 2C now, contingent resource until we drill the well. Then we want to convert it to reserves. And risk have, in the CPR, estimated independently that there's an 85% probability of confirming a sanctionable development based on the minimum economic field size. So it really doesn't get a lot better than this. There is residual risk, and that's why we're drilling the well before we commit to a development. In terms of redevelopment concepts, pretty straightforward. On the right-hand side at the top, we have the FPSO with a wellhead platform in shallow water. That was what was done before. If we get 34 million barrels, almost certainly that's the way we'll go. If we are unfortunate and get down to the lower end of the developable resource reserves, then we could consider a MOPU in the shallow water with an FSO out in the deeper water. But that's not what we expect to happen, because that's not what we're drilling for. 3-well development is the approach that we consider is likely to provide the optimum recovery. Wellhead platform 4-5 slot, very similar to what was done before. We hope to take FID somewhere in the early part of 22, let's say around about the middle of 22, because we're a little bit later in drilling than we had anticipated. Schedule standard for this kind of asset or development opportunity, about 18 months from FID. So that puts us with first oil at the end of 2023, which is our target. In terms of capex, we're less than $4 a barrel, which in today's world is pretty darn good. And this was again certified by risk. In terms of deliverables, I mentioned high recovery factor before. 60% is not unusual in this area. Laminaria, Corallina, Khitan, other smaller oil fields in the area have very light oil and high recovery factors. And we have 53 API oil, which is similar to what's found elsewhere in the region. Around here, 63% of the reserves are produced in the first 2 years. That goes back to my point about a modest volume of reserves with a very prolific reservoir. So life of the field is 5 to 6 years. We get it all out in a very short time. Very quickly onto economics. I won't go into detail on this. Focus on the top right-hand side with the table there. These are net numbers to advance, 50%. And you can see the CapEx, the cumulative cash flow, the NPV and IRR, and payback time. Payback in pretty every circumstance is less than 12 months. So in first year, the asset pays back in all of the scenarios that we've been working with risk and ourselves. The cumulative cash flow, for example, at $50, all this economics are at $50 oil. The cumulative cash flow for advance is close to $300 million, and that's a large number by any standards. The NPV, again, approaching 200, the IRR 100 or more about or thereabouts. Certainly, if you assume that we're at $70, I did a quick calculation, these numbers go up by 50%. It's very, very sound economically. Just going over to the left-hand side there, maybe look at one case, the case where it says the second last bullet, the 1C case. That's the what we would call approved. Say we are in that lower P90 case. That case itself is economic at less than $35 a barrel. So you can understand why Risk have estimated that 85% probability of a sanctionable project. Touching on ESG, this is a modern version of a lot of things that have evolved in the oil business. We do a lot and have been regulated very heavily environmentally in the oil business for many, many years. So that is not particularly new. Doing societal has been something that's been part of the business for many, many years as well. I've been in the jungles of Africa and Asia, putting in clinics and schools and so on and so forth for local communities, so that we give something back to those countries' population. From my point of view, we are always a guest in people's country, and we do the best by them that we possibly can. Just want to move on so I don't run out of time here, Donald, but I think I must be doing reasonably well because you haven't interrupted me so far. Last slide here, our investment case. We're a strong board with a management team, as I described. We've got 6 people, all with 30 or thereabouts industry experience, years of experience. And we also have supporting us the Exodus Group, who provide through an MSA that we have with them, established with them, ongoing and continuous technical support, both on the subsurface side and on the surface side. And that's working extremely well and keeping our G&A low. We have a proven ability of identifying and executing high value adding opportunities. It's a nice statement, but we also have some track record cases on our website. I encourage you to have a look at those. We're not actually saying we can do this. We've actually done it. The B10 well is November time due to start drilling, and in the parlance of the industry, of the market, sorry, value catalyst is extremely material, and what we are about in advance is about materiality. That is what we want to be doing. And the B10 well, of course, is very high impact for us. It is our first asset, but we have others in mind, but we can't talk about those, of course, until we are well advanced. I've mentioned the 34 million barrels, the high rates of return you've seen for yourself. I'd encourage you to look at the CPR. It's very comprehensive, and all those all the values in there are independently carried out by Risk, or well established. I would say the go-to certifier in Australia for sure, but they also have a base here in Europe. And we are targeting, as I said, cash flow generating projects, and we're working on those in parallel with getting Buffalo off the ground. Did I do well?
You did excellently, Leslie. What a star you are. I'll be perfectly honest, you have answered all my questions. That was very comprehensive. You did extremely well.
I hope I wasn't
Okay.
speaking too quickly.
No, well, I'm a Scot, so I understood you perfectly. I certainly understood. My goodness, what an exciting prospect, yes?
Absolutely.
Even you must be excited by this, Leslie.
I'm always excited.
No, but this is particularly exciting, isn't
It
it?
is. Well, I think it was particularly exciting to cut the deal with Carnarvon. I mean, it had been out there for a long time, and they were very resistant to doing a deal that wasn't exactly what they wanted. And in the end, we came up with a formula that met their requirements, and we got the deal. It was actually had been on farm out, if that's the right term, for nearly
Good
2
one.
years before we got the deal. So yeah, we were really pleased about this one.
It's always good to have a house which hangs around for a wee bit, don't you think?
Well, yeah, I mean, there is an element of that. We quite like picking up stuff that other people don't want or can't get.
Now, Matthew Stott asks the question that we're all asking, to be fair.
When are we going to start drilling?
Of course. When's the Spud?
Well,
Matthew Stott, very good. There's your name check. When's the Spud?
Yeah, when's the Spud? I mean, let me put it this way. It's out of our control when we get the rig. It should be clear to everybody. So the rig is currently with Jadestone, and it was due to be provided to us through the contract that we've got with Valaris somewhere after the middle of October. And we had anticipated that it would perhaps be in the first half of November, but in the end we said sometime in November. And as time has gone by, they have just obviously had problems. We don't know what their problems are, but they've kept plugging on. And at the moment, the latest date I have is towards the end of November. So we're not anxious about that. We'll get the rig. We're going to drill a well. It's just a little bit disappointing. Probably means I'm going to get the logs on Christmas Day or New Year's Day.
Oh no, that's not good, is it? That isn't good. Now,
It happened to me before.
Lordy. John Zadkovich asks an equally excellent question. For Leslie, he says, with one good asset under your belt, we can't deny that. It's a fantastic asset. In a jurisdiction some have found challenging, where else is the company interested in acquiring discovered assets?
Right.
What have you got up your sleeve?
That's a very good question, and I didn't really touch on it too deeply. We have, as I say, 5 tenets to this strategy, and one of the tenets is that we're non-operated, as I said. And one of the things about being non-operated means that we can focus on getting value assets and not trying to create a core area. You hear many companies saying we've got a core area here or a core region or whatever. We have that flexibility that if somebody comes up with an opportunity, presents us an opportunity in a place where we don't happen to be, then if the asset stacks up, the country fiscal system stacks up, and they stack up as an operator, then we can parachute into that company in the matter of weeks or months, depending how long it takes to cut the deal. And if it's only one asset in that country, we're not concerned. We're not building a portfolio in necessarily country. We're looking for value assets. So it's something that maybe people don't quite get. As an operator, that's not so easy. You have to build up a team. You have to build up an infrastructure that drives you to that core area aspect, and then you try to optimize the use of your personnel. We don't have that restraint. And come back to region, we've more or less decided that certainly North America is out because there's too much competition and knowledge that we don't have. South America, possibly, maybe. We have experience in the team in South America, but right now we're not looking at anything specifically there. Anything essentially in the Eastern Hemisphere is what we're looking at, except for China, Iran, and Russia. And we're looking at assets in lots of regions. We're interested in the Middle East. We're interested in Africa. We're interested in Central Asia, Asia in particular, because I've worked a lot in Asia. And
Leslie, I'm going to interrupt you there. That's a long list. Could you narrow it down for us? Is there one specific project you're looking at right now?
There are 2 projects that are we're very hot on at the moment. Let me put it that way.
How much can you tell me about those 2 hot projects?
Not a lot.
Darn, it's all going so well.
No, what I want to try and explain is that we have a very large field of potential opportunities. We're not restricted.
Is it possible to find something almost as good as the East Timor Buffalo Field?
Yeah, I would say that that's pretty much a one-off in many respects. And that's not just to say because it's the first asset we've got. I mean, you've got a conjunction of technical aspects that come together here, which is pretty unique. I can make some technical terms here without hopefully boring everybody. We have a Darcy reservoir. It has 90% net to gross. We have a very, very slippy oil. It's 5 times slippier than water. We have an internal water injection system. We have a massive aquifer that's pushing that water out, that oil out, sorry. And that's what creates this prolific reservoir with a very, very high recovery factor.
So the technicals on Buffalo are excellent from an oil person's perspective.
You've got everything you dream of having here, virtually.
Good Lord. Now, Dave Westlake, he's not satisfied with the answer of first production by the end of 2023. He says, could this timeline be accelerated? And what's the possible best case scenario? He's asking the CEO to put his head on the chopping block.
Well, I don't want to get it chopped off, so I'm going to say I can't beat 18 months. I think it's very hard to beat 18 months from FID on this style of project. I've done several of these in the past. When BHP did the development, they did it in 15 months from FID. They're BHP, we are not BHP. Okay,
Stefano Bruscioni has just asked an interesting question. The Buffalo success will re-rate the shares, our shares, he says, so he's a holder, significantly and simplify funding for new deals. In this respect, what funding solutions do you see for new deals which might be non or less dilutive?
I think we're going to look for debt. And we have a very, very experienced CFO in Stephen West, who's he's Australian, but he's lived in London and been in the market seeking funds for various companies in the past. We brought him on board because he's a specialist in this area, and we expect to be able to raise debt against some of the assets and opportunities we're looking towards at the moment.
And this is sadly, it might be our last question. It's a cheeky question from John Patchett, but not a bad question, but nevertheless a cheeky one. Clearly, we all hope the Buffalo will succeed, but what happens to the company in the light of the 15% case that it might not?
In the 50% of the case, but that it might not. Well, first of all, I would say the chances of us not having a development are very, very, very small. It would be almost unimaginable to me that we don't have a development. I'll be perfectly frank with you about that. Wow. And that's not me. I mean, it is me saying, and that's why we wanted to get into the asset. But it's been verified by Risk through their CPR, which is an independent piece of work that we can't influence. So I would say, don't think about failure. Just think about success.
Okay, Alan Edmonds, much more positive. What grade of oil is expected?
Sorry,
you said what grade of oil is expected?
What grade? Well,
you said it was very slippy.
It's pretty slippy, yeah. I would actually call it. I've come around to calling it the champagne of oil, basically. It's 53 API. It trades at a premium to Brent of about $2, and we have a number of companies that are very keen, despite the small volume, trading companies that are very keen to get hold of it. So when it comes to raising funds for the development, we expect a lot of competition to get access to this oil.
Okay, my very last question. Carnarvon are a safe pair of hands, you said, Carnarvon Petroleum. Why so? Tell us a little bit more about Carnarvon.
Carnarvon as a company has been around a long time. The current team are all E&P veterans. I think they're a little bit younger than we are, which is maybe not a bad thing. No, they've been in the oil and gas business, their careers. They're involved at the moment in a very complex development called Dorado with Santos, much more complex than what we're doing at Buffalo, which is relatively straightforward in E&P terms. We're confident that they can deliver for us. And not only that, I come back to one of my early points. We're a two-party joint venture. We're 50-50. We have a lot of experience that we can bring to bear, and we're actually doing that in conjunction with them. We're effectively a joint team. Leslie
Peterkin, CEO of Advanced Energy. That was absolutely fantastic. Not
Well, thank you for
overstating it. What an interesting story. Thank you so much for joining us to tell it.